says that the first fund from the National Investment and Infra Fund will be to tackle stressed assets and accepts the fact that the government and the public would have preferred to see a sharper fall in actual interest rates.
As far as transmission is concerned, clearly the RBI having cut 125 basis points, we have not seen a sufficient transmission as we would have all liked to have seen. There are 3 or 4 factors that come into play here. One is that many of the banks will tell you that when RBI was raising, they didn't raise as much as the RBI did, and so they don't need to bring it down as much. So that's one factor. The second factor, which you all know about, is the small savings rates. There's been a lot of discussion about how to align those better with the repo rate, with other rates that are in the marketplace. So that's a second factor. The third factor, as we all recognize, is the reality of the balance sheets and the profitability of the banks themselves, particularly those banks that have low NIMs, net interest margins, use this opportunity to some extent to repair their balance sheets, to strengthen the net worth and so on. So that's a third factor that has to be considered. And then the fourth factor, which of course, as you know, that the RBI has been talking about, is this whole question of, do you price on the margin or not? How is the base rate actually set? And so the methodology of setting the base rate, which will then result in a more efficient transmission, is also being considered. So these are all the 4 factors that impact how in fact monetary transmission happens, and on all of those fronts we are working hard to ensure that in fact markets work efficiently and quickly in this regard.
And this is something that you told me when we last spoke, and that was using the National Investment Infrastructure Fund, or the NIIF, to be able to deal with the issue of stressed assets. I know that the NIIF itself will be operational or will be launched in November. Where do things currently stand on formulating the guidelines for the NIIF to actually alleviate the pain of stressed assets?
We are making very good progress. We obviously would like to launch not just one but multiple funds through the NIIF before the end of the year. One of the very high priority funds that we would like to launch is a stressed assets fund, because what is happening is, as the banks themselves are going through the strategic debt restructuring and so on, they are ending up with equity in some cases, they are ending up with debt also that they may not want to hold, and so we want to create enough capacity in the market to be able to take over the equity, take over the debt as required, and again make it possible for the banks to be able to get those NPAs off the books at a reasonable price with the restructuring and everything else. So the NIIF also is a very important element of taking some of the stress off the banks.
All right, well, with that, it's a wrap on Street Science.